I'm Lindsay Melchick, and this is the Market Frontlines reporting from PDAC 2026 in Toronto. In a convention center packed with drill stories and single asset speculation, one company has built something far more strategic, a mineral bank. Over 200 properties, gold, silver, base metals, critical minerals, royalties layered across projects it doesn't even have to fund. A model built on leverage, patience, and smart paper. Joining me is David Christie of Globex Mining Enterprise. While much of the junior space lives quarter to quarter, Globex has spent decades assembling optionality across cycles. In this kind of market, that kind of positioning matters. Let's break it down. Welcome to the show. It's great to have you here.
Great to be here, Lindsay.
How has it been for you this year?
It's been extremely busy. I've been back-to-back meetings the entire time.
Just as great. I mean, we're in a good market for this, and people are buzzing, and they're wanting to learn more information, and that's key, is just sort of the education around that, right?
Exactly. Yeah, it's making sure they understand what you're doing.
Exactly. So you guys, you're very well known, but there are still some new audience members out there. So why don't you just give us sort of the elevator pitch on Globex?
So I think when you look at Globex, you have to think about it in sort of 5 parts. There are 4 parts. There's the balance sheet, very strong, no dilution to shareholders, haven't done a rollback, been around since 1987. So that's huge. 56 million shares outstanding, $40 million in the bank. Second thing is our wholly owned properties. We're making discoveries on our own properties. We're drilling holes. We're spending money. So we've got a lot of leverage there. There's over 150 properties that are wholly owned. Then we have 107 royalties, and a number of those royalties are coming to production in the next 2 to 5 years. And I think that's the real impetus for growth here, and probably where most of the value of the company sits is in some of those big royalties like Mount Sorcier. So that's one part. And then there's the properties we've optioned out. We announced a new option this week on our Geopolitics projects. We have about 8 or 9 options now, and the work that's happening on those is huge. So if you look at all our projects, or the ones that are wholly owned, the royalty projects, and the option ones, there's over 300,000 meters of drilling happening on our claims. So that's huge leverage, huge optionality, and a huge value add for our company.
Yeah, I would say so for sure. Well, let's talk about your diversified portfolio. As we mentioned, you have 200 plus properties, multi-commodity exposure. The question around that is, how does that diversification reduce risk?
Well, I think we're the primary business, as Jack would say, we're in the business of making money, and we're here to make money. So we tend to acquire properties that we see the potential to make money. So it's not necessarily we want to be a gold producer or we want to be a zinc producer. We're here to make as much money as we can for our shareholders.
Right.
So we acquire properties in the down cycle of different commodities. So we got antimony projects in New Brunswick when no one cared about antimony. Now everyone cares about antimony. We've optioned those projects out, and those 2 companies are doing gangbuster work on those properties. So that's great. But we've got, nickel projects where no one's really looking at them yet because nickel prices are still depressed. So we're ready for every commodity cycle as they come along. And I think we're moving into a bull cycle for almost all commodities going forward. And I think that's going to be very good for Globex shareholders.
So who would be your target audience then? With that many projects going across the board?
Well, I think we're transitioning from people who like to buy project generators. We still are that, to the royalty space. Because as our royalties get closer to production, we have one going to production into this year, beginning of next year, but we're going to have a lot going into production in the next number of years. As that happens and our value proposition changes from a project generator to more of a royalty play, I think the people who buy royalty companies and invest in those kind of shares will look more at us. We continue to be project generators. That's not going away, but the royalty space becomes more important.
So your properties are based all over North America, is that correct? Is there a concentrated area in North America where you're seeing a lot more success or a lot more challenges? Like, what are the positives and negatives in different parts of North America?
I think, we're predominantly in Quebec. We have a lot of properties in Quebec because that's where we started. But we're expanding into other provinces. We have a big position in New Brunswick, Nova Scotia, Arizona, Nevada. So we're expanding into those places. We have a guy based in Las Vegas acquiring properties for us. So we are definitely expanding outside of Quebec. The challenges are different in every place. So the acquisition space, the keeping the property challenge, it's different in every jurisdiction. So, they all have their own challenges.
Right. What about permitting? If you look across all your different provinces that you're working in, is permitting different in every single one?
It is a bit different. It's similar, but different. Like New Brunswick has a faster permitting process. So that's exciting for our partners there. Nevada is easier if you're on patented land, or So there's different things in different areas. So you just take that in consideration. And now, in Canada, they are pushing big projects forward faster. So that should help as well for like things like Mont Sorcier. Feasibility studies coming out on that this summer. They are going to move for permitting applications by the end of the year. So they're hoping to get permitting quickly on that because it's a critical mineral. It's a very large project. It will have huge economic benefit to the province of Quebec. So I think they're hoping they can get permitting faster than the 2-year sort of window, maybe a year and a half or less than that. So.
Well, you see cross-border then. How's geopolitically, how are things looking on either side of the border right now?
Well, that's the one thing about mining. People need the products that mines produce, no matter what tariffs different countries want to throw on them. They still need those products. So I think that's not going to really affect mining for the most part. But those materials are still going to move, whether they move south of the border to the United States or they move to England or France or wherever, they're still going to move. People still want those products.
Yeah, okay, fair enough. Let's switch over to that royalty model that you spoke about. Options projecting are being projected to be out in the coming, soon history, or not history, soon future, we're going to say. And my question is, how critical is the royalty layer to long-term value?
Well, I think it is the most important thing because it's the thing you can actually point at the value. I can do a NPV on a royalty stream where there's been a feasibility study. I can't really do that on a grassroots exploration property, right? So those are more sort of thumbsuck valuations. Whereas value on a royalty where there's studies being done, there's resources, you can actually point at what the value is. There'll be a line item on the Mont Sorcier feasibility study that says royalty. So any investor can look at that and do a undiscounted NPV on it, right? So I think it's much easier to value royalties that are moving forward than it is to value properties that haven't moved forward yet.
Do you have one that you're super excited about right now?
Well, we made a discovery on our Rouyn-Merger project. It's just outside this. Well, it's actually in this town of Rouyn-Noranda. It's right next to the airport there. We hit 3.44 grams over almost 40 meters. Hasn't been drilled since 1959. Sorry.
Wow.
So very exciting project. We're doing IP on it right now to extend this horizon, and we will do more drilling on that this year.
That's exciting, right there. Yeah.
Okay.
Okay.
That's 100% ours.
100% yours. What about, commodity optionality? Let's go there. So gold, base metals, critical minerals, those are all really great exposures. How do you decide which assets to push into the cycle?
Well, I think the cycle pushes the assets to us more than the other way around. So as cycles change, we have as you said, a bank of properties. So it's like going shopping, really, right? So someone wants a property, they come to us, they say, hey, we like your copper project and wherever. And so we say, yeah, we can do a deal on that project and we'll do a deal on that project, retain that royalty in the end and move that project forward. If it's a project we're already working on, we might not do that deal. But if we're not working on it and someone wants to buy that project, we're definitely ready to sell that project.
How do you know which ones are like, yes, I want to be involved in that one, and which ones you're going, bit of a red flag here?
Well, I think, the ones where we've already made huge discoveries like Cadillac Wood or Rouyn-Merger, those ones, I think they have more value. So someone has to offer us a lot of money for those ones before we're going to part with them.
Right.
So we're more willing to get rid of the ones where we haven't made the huge discovery on them yet than we are to get rid of those ones as fast and easy.
So with that many projects, are they all active, or do you sort of cycle it through?
They're not all active. We have a number of, when you look at the 270 odd properties we have, or about 150 something that are 100% ours, we have a top tier group of projects that we're actively working on, not because we have to keep the property, but because we think they have the most potential.
Right.
And then there's a group of properties where we have to do the work because we want to keep the project because we think there's potential, but we haven't done the work yet.
Right. Wow.
So there's always work to do on almost all the properties, and we keep cycling through that. But we have a team of geologists in Rouyn-Noranda, and as I mentioned, one in Vegas, and they're always doing work to move those projects forward.
So David, what's next? I mean, you have so much on the go. What's next?
Well, we have a strong balance sheet, and our share price has been doing better. So we're always looking for things that can supplement the royalty stream. So if we can bring something in that will fill in the gap before we get really good paying royalties, we will do it. If we can do it where it's 1 + 1 = 5, I'm going to look for things that are extremely NAV accretive, and we are looking for those kind of things. And we bid on those things all the time. We don't tend to win them yet because We don't want to compete against your Franco-Nevadas of the world. We want to compete against ourselves only. So, but we're very patient, and we're looking for good things to buy, and we will do something like that at some point in time, but only if it's extremely accretive to shareholders.
Well, I know I'm intrigued. I'm sure the audience is intrigued as well. So thank you again, and definitely come back and let's talk a little further about those projects.
Thank you, Lindsay.
Absolutely. Again, that was David Christie of Globex Mining Enterprises, trading on the TSX under GMX, on the Frankfurt under G1MN. A diversified mineral portfolio, layered royalties, decades of disciplined deal making. If you're looking for leverage to discover without single asset risk, this is a model worth watching. For more, visit globexmining.com. I'm Lindsay Melchek from Abaton Media, reporting from PDAC 2026 in Toronto. This is the Market Front Lines. Stay ahead of the cycle. I'll see you in the front lines.